Joining us now with a closer look at markets, Shannon Saccocia, a CIO at NB Private Wealth and a CNBC contributor. And Shannon, I didn't get overly excited reading some of your comments there. I did at the beginning. A lot of good macro themes for you, like government spending and tax cuts and trade realignments, deregulation, industrial policy. But you think the S&P 500 could struggle a little bit?
Joe, it's great to be here this morning. I think what we're looking at here is the potential for, a little bit of a dip and sort of that J curve, if you will, for the back half of the year. If you think about what, from a policy perspective, is going to happen first, we probably get this overhang of some of these executive actions, this potential issue with tariffs, whether it's with China or with Mexico and Canada as it relates to the USMCA. And so I think what you're going to see is that a lot of the tailwind, if you will, in terms of the new administration is going to come with this loosening of regulation, this opportunity for additional M&A. And that's really going to manifest more so in the back half of the year. So I think that's why you're seeing the market struggle a little bit for direction as we start 2025, because they know that some of this near-term overhang, questions about the debt ceiling, questions about the speakership, who's going to be calling the shots in Washington, all of that is sort of front-end loaded. And so this is really more of a shorter-term time frame. We think that there could be some of these puts and takes. But in the second half of the year, we do think some of those stronger tailwinds will start to manifest and really push us towards the positive markets that we anticipate could carry us into the second half of the year and into 26.
Mike Santoli was just saying that the industrials have been a little bit weaker than some other areas. But you like the industrials. You like mega cap tech or industrials? You think there'll be a little bit of a rotation there?
Yeah, so I think the challenge has been, and honestly, we've had this view for much of the last year, is that there's a vulnerability in the valuations for mega cap tech, and there's really just no room for disappointment. Now, as you know, earnings have been pretty strong. And again, we're not necessarily saying that earnings for mega cap tech are going to be weaker than the broader market. They're obviously, from a relative perspective, going to still be at those higher levels. However, we do think that there are opportunities as this broadening out continues, that there will be areas like industrials which could benefit. But even with under the surface, as Mike just mentioned, there has been some meaningful selling in certain parts of the market where there could be opportunities, even in an area like industrials, where we've actually seen some strong performance. There could be a pickup in the second half of the year. Just, Joe, I mean, we've been in a manufacturing recession over the last couple of years. And so we really do need to see the manufacturing sector start to pick up. We need to see that reshoring theme really start to manifest in actual activity rather than just rhetoric, which we've been hearing over the last 2 years.
What's your biggest concern, a slowing economy or a sticky inflation?
I think the bigger concern is probably sticky inflation, and it's not because of the Fed, because the Fed has obviously sort of given us they've telegraphed, if you will, their plan, and they want to try to bring rates lower. But as you've seen, the yield curve is not reacting to what the Fed is doing, right? They're reacting to this potential for stickier inflation, this potential for this overhang from some action, whether it's tariffs or immigration, or just kind of general stickiness in inflation from a consumer perspective. That's really what the bond market and what yields are reacting to. And although we have seen that, higher yields don't necessarily equate to fundamental weakness for equities, they do put this overhang in that they take away one of the tailwinds that was anticipated as we went into the back half of 24 and into 25. And so I think looking at bond market volatility, we've seen what bond market volatility has done to the equity market in 24. And I think that that's where we're kind of looking at this debt sustainability, concerns about inflation, what happens in the bond market, and how does that affect equity prospects as we go into 25.